So today, so what we're going to do is this. Let's do this one first. All right. So if this was the chapter 6, I can give it to you as homework. So that's what I got written here. And again, the important thing is you pick up the entire warranty expense, whatever it is. You pick that up in the first, when you make the sale, because you're going to have all these sales. And you're going to have the total warranty expense. So even if it goes out 2-3 years, whatever those expenses are for the next 2 or 3 years, you're going to pick those up or make an estimate of them. And book those immediately. And then the actual costs are just taken out of the liability. So you put the liability on the book, say, okay, we're going to owe $20,000 over the next. Well, this could actually, excuse me, this could actually go into 3 years. I mean, in calendar years. If you've made a sale halfway through the year, you go 1 year from that, and then another year from that, you're into the 3rd calendar year. But okay, so this is the journal entry for number 6, and these are the. And I think I can't remember if that was correct or not. Anyway, these are the this underselling expense. You have the warranty expense. Why do you give a warranty? To make a sale. And the warranty liability, you break it up between current and long-term, or sometimes called non-current, same thing. Question on that? Okay. Service type warranties. This is when you sell a warranty completely separate from the product. It might be added onto the product, or it could also be just a completely standalone. And the important distinction here is this, that they are not integral to, in other words, they're not included with the product, that they're sold separately. And quite honestly, people sell these, as you know, all the time without. I am so sorry about that. Mute that. If you watch TV, now the big thing are auto warranties. They does have some auto warranty or a house warranty. If you have a house or needs whatever. So they have, even if they didn't sell a product, they'll sell you a warranty. And that's kind of what we're talking about here. And it's basically the same as unearned revenues. This whole thing is just unearned revenues. Okay, so what we're going to look at here are the warranty portion, and they sold 1,200,000 of warranties, and the estimated warranty costs for the sales were 900,000. And actual warranty was 180. I don't know why I'm reading this to you. You guys can read it yourself, but okay, so here's what we're going to do. We're going to break out those warranties. So the product sales would just be sales, revenue, whatever. Now these warranties, though, we're going to break them out separately. So these were sold separately. Okay, so we're going to get cash. For 1,200,000. And we're going to have unearned revenue. Liability going up. That's what liab. You guys know what I'm talking about. All right, so this will be. And that's it. for the unearned revenue. Now, as we earn the revenue, we will recognize it. And we earn revenue basically kind of like you did in other classes where they may tell you what percentage of it was earned. And so you're going to use these two to figure out how much was earned of this revenue. Okay, so I'm going to okay, so you get to get a percentage of it, you're going to take what was the actual. Oops, let's try that again. It was 180,000 divided by the estimated 900,000. And that'll give you a percentage, and we're going to multiply that by 1,200,000. And we'll see how much of it we have earned. Okay, so 180,000 times 1,200,000 is. Looking at that. I calculate. Here's my calculator. $240,000. So this is what was earned. Put a dollar sign. Oops. And I won't put a dollar sign in front of it and knock it down to the next page. Here we go. Okay, so we have this unearned revenue. We've now earned 240,000. So what's the journal entry going to be?
On revenue debit and warranty revenue credit.
Good. Earned revenue. This is a liability going down. We've now earned that revenue. 240,000. Key revenue is going up. That's plain old earned revenue. All revenue is earned, by the way, or else it's not revenue. And the actual warranty costs were $180,000. So warranty expense 180. Oops, nope, 80,000. And this could be cash, parts, labor. Any questions then? So we have this big liability sitting on the books, and then as we earn it, we will take it off the books. So we've earned, I think it was like 20%. We've earned 20% of it. So we're gonna take it off the books and put it in as plain old earned revenue. Calculate the recognized profit. Okay, we would have. Well, why don't you guys tell me, how much would we have in recognized profit for this? Remember, this is gonna be revenues minus expenses. Anyone? How much do we have in revenues? I'm not talking about unearned revenues, those are liabilities, but how much do we have in regular old revenues?
240?
Yep.
Like a recognized profit of 60,000.
Yep, that's exactly right. So 240,000 is what we're recognizing. Minus. I'll clean this up in a second. I'm gonna clean it now. Bigger. So we have warranty revenues minus warranty expenses, and that will give us a profit of mentioned 60,000. And we still have warranty unearned revenue on the books at I don't know, whatever this might 1.2 million minus the 240, whatever that is. Is that 960? So we still have a liability on the books. Yep. Yep, you're actually right, Matt. And again, this is kind of like what you had in your other classes. It's just they make you kind of jump through this hoop of figuring out basically what percentage of it have you earned. Okay. See if you can figure this one out down here. Is that one different or is it the same? It's the same. Okay, did you figure out how much of the warranty revenue we're gonna recognize? Anyone? We'll sit in awkward silence until somebody gets this.
$3 million?
Yeah. That is right. Yeah, you're gonna find a percentage of it. I'm just gonna copy this because, well, because I'm lazy, that's why. I'm gonna copy this down here. Shrink it down a little bit. We got bigger numbers down here. Okay, so the actual that the costs were, oh, pretty close to what I have here. And the total estimated was 2,400,000. And the total of our unearned was 4 million. Okay, so actual was this 180. Estimated was 202. Excuse me, I said that wrong. Estimated 1,800,000. I did that wrong again. Okay, let's start over. Actual 1,800,000. I don't know why I'm even reading this. You guys are estimated 2.4 million. And so they'll give us a percentage. I think it ends up being like 75%. And so this would be our earned revenue. So 3 million of it is earned. So we'll recognize 3 million. Okay, so what would the profit be? Warranty sales in 2023. We do. Oh, come on, you guys are toying with me. How much profit? Oh, wait a minute. So you guys are, because my bad typing. Anyone?
1.2 million.
Yep, very good. I'm gonna copy this down. One. Yeah. Okay, one more. Call it a day for this handout. And this one is just it doesn't show them selling any product, and this is we see this all the time. A lot of times it's not the company manufacturing or distributing it that'll sell it. All right, so I'm gonna be quiet and see if you guys can figure this out. Did you even get what the earned was on this? Yep. All right, so times 100. Yeah, so we earned 20 oh, no problem. No problem at all. So this is number 9 we're on. Okay, so let's see, we earned what is that, like 40%? I think it's 40%. So 40% of it was earned, so we will take 40% of our unearned. So there's a liability going down. And we'll count as plain old revenue. So now we've earned 320 of it. Oops, there we go. So is that right? 120 is the profit? Yeah, that's right? 120. Well, I have this on there either. Okay, well, here's a CPA exam problem. We're gonna spend a little more time on it. How many do I have here? All right, that's it. All right, we'll do this one. I think there's one like this on the multiple choice review. Okay. So during it, Levert introduced a new line of machines that carry a 3-year warranty. Estimated costs are 1% in the year of the sale, 4% in the year after the sale, and 5% in the second year after the sale. Okay, now when we sell something, we record all of the estimated cost for it, the expenses, right up front. So these carry a 3-year warranty. It's integral into the product. So the question is, what percentage are we going to of these sales are we going to record when we sell them? So let's take this first one. Now, what percentage are we going to the 2015 sales?
%?
More.
What do you?
I'm sorry, go ahead.
No, I'm just trying. My bad.
We're gonna recognize all of the estimated expenses right at the year, right when we make the sale. I'm having the hardest time controlling my mouse. Okay, here we go. So right when we make the sale, we're gonna estimate all of the warranty expense for this item, whatever, or these products. So what percentage are we going to recognize?
Is it 9? Or 10, 10, sorry, my bad math.
Yeah. No, you're right, 10. So this would be 1% plus. %. It's on a different line, the source. So we're gonna recognize all of these all at once. Because we're gonna say, okay, we know they're gonna pay out 1% first year for it. So right when we make the sale, we're gonna have 10%. That didn't exactly look how I wanted it to. Let's try this again. So 10% is the estimated cost of it. This is a total cost. Okay, so I'm going to add another line here. All right, so estimated cost. So if 10% of the 80,000 is that didn't work out very well either. I'm gonna put it over here, 10%. Okay, so 800,000 times 10% is 80,000. $1.5 million. 10% of that is what? 150,000. You can tell this is a really old CPA exam problem because they're nice. Back in the day, I think I told you guys this. Back in the day, they didn't let us use calculators. So you get these nice round numbers that you came up with some wacky number, you knew it was wrong. Like 58.723 or something like that, you knew it was wrong. Okay, so the totals are, what's that, 80, the 430? I'm gonna check me. Let's do 30. So every year we're gonna record the entire 10%. Right up front. Okay, so what is the total amount that Blever? I'm not sure how you say it, but anyway, contingent liability as of December 31st. So this is how much the total estimated cost was. This is how much they've actually paid out so far. So what would be the contingent warranty liability?
Is it D?
Yep, it is. Yep. The estimated cost was. The actual paid. Expenditures is what was paid, expended. Oops. Hey. Yeah, so we still have we have a liability basically on the books of 284,000. We put costs of 430 on the books. We've spent 136 of it, so we kind of like we paid back 136 of it, so we still have 294 of it to pay back. Question on that thing? Okay, well, we're done with this handout then, so we can turn that in. The next thing let's pull up is exercise 1312. I think I might add a row in here. Okay, so this is similar to the ones we had earlier. This is where it's integral. Like number 5, 6. Like numbers 4, 5, and 6. Okay, now they tell us they sold 200 copiers for $4,000 a piece. I'm assuming that's cash. And some kind of revenue, maybe I don't know, copier revenue or some kind. You can just put revenue is fine. And let's see, that it'd be for what's 200 times 4,000?
800,000?
Yeah, 4 times 200, yep, 800,000. Oops, no, hold on. Okay, so they sold 800,000 of these copiers. And we're going to have a warranty expense and a warranty liability put on the books at the same time, because this is sold along with the copy machine together. Okay, so we're gonna have a warranty liability. Sometimes they call this a warranty obligation. Put in another row here. Okay, so the question is, what do we have for this warranty liability? Well, they estimate it to be $330. All right. So we have 200 copiers times 330. Just some number. Okay, I'll be more specific. Let's see, 200 times 330. 66,000. Okay. Now I'll let you guys figure out what to do with the actual costs. I'm gonna sketch on my sheet screen for a second. I gotta do something. It's not bad. It's a good thing. Okay, and I'm back to sharing. By the way, that water running in the background is not a toilet. That's a it's a sump pump that keeps going on. Unless the little dogs upstairs are using the toilet, it's not a toilet. All right. So let's see, the actual costs were. They don't say. Oh yeah, here they do. The actual warranty costs were 17,000. Okay, so that would be. What would be the entry for that?
Warranty liability
Yep.
for debit,
Yep,
and then cash parts labor.
yep. Okay, so this would be, so we're working off this liability. So this is the liability going up. So coming down here. Now we're working off that liability. And yeah, this would be kick, oops. Yep, so we've worked off 17,000 of the warranty, and we can, we can figure out how much is left. It doesn't ask for it, but anyway, that's it. So that's E1210. So save that. That's also, I'm gonna check and make sure I have that in as an assignment. Yep. All right, so we got 2 of those down. Okay, I think we're going to take a break, but before we do, I just sent out an email. Hopefully you guys got. Let me see if I got it. Check, see if I have it. If I have it, then maybe you guys got it. Doesn't always work that way, but. Yep. Okay, looks like you should have got it. Or you should get it soon if you haven't got it already. The multiple choice review. And I don't, chapter 22, we didn't do this. So this would be the first time we're gonna do this multiple choice review, and this will be allow you to get extra credit points. And it is if the class gets, I mean, there's 7. Okay, if you get 3 right. Then you get +2 added to your test. If you get 5 correct. +3 added on your test. You get 6 correct. +4, and if the class gets all 7 correct, perfect score. You'll get +5. Now you're wondering, how do we do this? How do we tell you what we're choosing for these multiple choice questions? So here's multiple choice questions. They have A through D. And how do you, so I am going to, oops, no, not there. I'm going to start a poll. So you should have a poll show up that shows questions 1 through 10. Now we only need to put in 7, I think. Yeah, there's 7 there. So for instance, the first one, if you say it's, I don't know if this is the right answer, but let's say it's B, you'll just click on B. It's gonna be A, B, C, or D. Don't pick E or no question. Except for 8, 9, and 10. 8, 9, and 10. There is no question for 8, 9, and 10. It doesn't matter what you put in for 8, 9, and 10 because they're gonna make you put it in to complete the poll. But there is nothing. So and as a class, then we'll go through, I'll share this with you and we'll go through and see what how the class did. Any question on that? So let's take, we can go ahead and take a break and we'll say be back at, I'll give you a chance to take over and look at it a little bit. I'll say like, so to go ahead and take a break and then start on this. And so let's say be back at 7:15. And so, go through it, do your best on it. Yeah, oh, and also, more thing. Do not be afraid of putting in a bad answer and that the rest of the class is going to see it. Because they won't. It'll only show what the what's wrong with my video. Maybe I'm just blurry. All right, don't worry about it because it's not going to show up. It does not give who gave which answer. So don't worry about, oh yeah, I don't want to answer it because I don't know if it's right. And people will see that it's not right. When I go to the class. Now it will show everyone who answered it, and I'll know that, and that's how I give the extra credit points. So if you don't answer anything, you don't get extra credit points. But if you do answer it, then you're in with a group, and okay. So be back 7:15, and come back a little earlier to see if you can work on these and see what you can come up with. By the way, for some of these, you can go ahead and look it up on the internet. There's nothing wrong with Googling. That's true on the test or the homework or anything. In fact, I would encourage you to. Okay, so if you haven't finished up, are some people working on this?
Yes.
Okay,
Do you want us to start putting in the answers on that quiz thing?
well, yeah, when you're finished up doing it, yeah, that's fine.
Okay.
Yeah, and then like for 8, 9, and 10, it's gonna require you to put something in, but whatever you put in, it doesn't matter. Excuse me. Is there anyone still working on this? Anyone still working on the multiple choice?
Yeah, I got one more left. Sorry.
Oh, okay. No problem. Oh, I'm sorry, everybody's in. Let me end the poll and I'll share the results, and then we'll go through them. Okay. Well. Take a look here. Number one is D, all of these, yep. 2 is kind of a tricky one, but it is C. And is because it's reclassified or be refinanced with 3-year notes. This is kind of a weird one. I'll go ahead and tell you. Even if at year end it wasn't refinanced, if it was refinanced before the audit report came out, they will count it as a long-term liability. So even if at year end it was a short-term current one, if by the time the audit report comes out, the last day of field work, I should say, that they have refinanced it, then it would be counted as a long-term liability. It's different than the international standards. Will say that you have to have it refinanced by year end, but US standards are a little more lenient. But it's kind of a wacky thing that we did not talk about. Which the following may be a current liability? Which one is it? All of these. Or yes, it's D. It's split on that one, but we'll give you that one. That was a. This one's confusing because of the way they wrote it. If you recall from our journal entries, we didn't do any of these. A prior period adjustment is basically done if there's an error. That's when you do the prior period adjustments. There isn't an error here. It's it's just 2% of the annual sales. And if you look at this account, it's a little bit tricky in that it had a debit balance, which means it was negative. So if you had a negative 6,000 and you had to get up to 30,000, what would it take? A positive, it would take 6,000 just to get to even, and then there are 30,000 on top of it. Anyway, long story short, you could also just have done this. Yeah, this is again the kind of tricky wording or whatever. This one is A. And by the way, if you want me to go through any of these, let me know. It's A. They if you take 7% times that. So 98,000, and then these two together, 60,000. Oops. Ah. Six is a wacky one too. All right. This one is really important on the dates. September 1st. Their first payment was on September 1st, 2024, and December 31st, Gary should have accrual interest of. Okay. So they make payments of 500,000 plus interest. So as of after September 1st, 2024, it would be 1.5 million minus the 500,000, so it kind of like this. So payment made on, so the principal amount left would be 1 million. And then we say, okay, well, between September 1st, 2024 and December 31st, 2024, how many months went by? 4. Oops, no, 4. So 40,000 is the answer for that. Kind of a wacky one, the way it's worded. I remember the first time going through it, I was like trying to figure out what they were talking. Okay, last one. I messed up my spacing here. Okay, last one. So it's basically 180,000, 1.8 million times 12%. I wish I put this up. I just over here. And I'm just adding up these two percentages. Number. Equals 216,000. And you're right, it is that number. Because it is 216,000 minus the actual of 84. Well, those are CPA exam questions. And you guys did really well. I know you may not think that, but you did. So what is that? You have +4. All right, so I'll save the poll. All right. Nope. What is this, week 5?
Yes, week 5. Professor, can you, when you finish doing that though, can you just tell me what 5 was? I think I missed 5.
Sure. Let's see here. 5 is 38.
Okay, thank you.
Yeah, the estimated liability, and the trick with this one, this is one of the things that they always try to trick you on. They put the percentages separate, but you're gonna add those together. So there's a total estimated liability. The actual cost, these two. Let's make those green, how about? That's what you already paid off, so there's still 38,000 left.
Yeah, I understand it. I got it. I just didn't hear the answer.
Sure, here.
Thank you.
And now you guys got to what, 6 out of 7. To pass the CPA exam, you need about a 75%. So, so what you, I don't know what you guys got, but so someone was this probably like around 86% or something like that. That's, you know, that's becomes CPA kind of numbers. So that even though you may not feel super confident with it, you got to get used to that feeling. You know, 80 whatever 6% is really good. So. Okay. Oops, that's my page. Let's see here. Already did that. We did that. So the last thing we have is practice exam. I don't know if you guys have already done. Have you guys already done this? Well, we'll shoot through this. This shouldn't take too long. I'll tell you what. I'll just kind of walk through it. If you have any questions, you can stop me, and I'll go over it more in detail. Cash. Note payable. I don't know if you guys want me to put these on or not, the liability and the liabilities are going up, our assets are going up. Some of my overly generous journal entry lines here. Accrued interest on 12/31. Okay, we had 60,000. And annual interest rate is 8%. And this is for what, 3 months. $100. Okay, so what we're gonna have is oops. I don't mind putting these in, but you guys gotta tell me if I put something in wrong. So, oops, like that. Okay, coming down here. What are we gonna do? We're gonna pay off our notes payable. pay off our interest payable. And a couple ways we can do the other one. I'm gonna do with the kind of the cash method. And the question is, how much cash do we have to pay these people? Well, we have to pay them the interest. This is a total interest. Going to track calculation, we had 60,000. 0.08, and this is for what? 5 months? 5 months. Okay, so our cash, we're gonna pay. Principal plus the total interest. Now, these don't equal. So we're going to plug in a number to make them equal, or we could also just take this times 2 months and get the same number. But the interest expense, either way, you're gonna get the interest expense. It's gonna be 800. And the way I just did it, that would be a plug number. Make the two, to make the debits and credits balance. But you can also calculate it. It's just there's 2 months in the current year. It also wants it, 60,000 times 0.08 times 2/12 will also get you that 800. So either way. This is for 5 months. This is for 3 months. This is for 2 months. Question on that? Did I do it right? That should maybe be the first question. Did I do it right? Then question. All right. Yeah, they don't need to delete cells. All right, let's go to the next one. This one that says estimated warranty costs. I'm gonna put in the sales too. I think on the test I have sales also. So yeah, I'm almost positive the test I put it. So this will be and so we have to put in our estimated warranty costs to offset these revenues. We recognize the revenues in this year, and even though these are going to be paid off in the future periods, we're going to put the expense in for this one. So this will be our warranty liability, sometimes called warranty obligation, either one's fine.
Professor?
Yeah,
Dumb quiet probably doesn't matter. Dumb question. Is that supposed to be asset plus or negative at the top there? For cash.
this is the sale.
Okay, so it's the sale, it's the okay.
Yeah, no, yeah, this is something I'm adding in here. This is actually what it's asking for was the estimated warranty. So if you just put in that, that's fine. I think on the test I asked for both of them. It's the only reason why I'm putting it in.
Okay, I just want to make sure.
No, the actual warranty costs will be these. So if you just put those in, that's fine. So this is the estimated warranty costs are this. Now the actual ones down here are, what is it, 110? Yeah. So down here, these are gonna be negative. Well, it'll look like this, warranty liability. So down here, we'll have warranty liability. And this will be going down. Oops. Hold on a second. Ignore what that crazy person's writing. Okay, so warranty liability, and then this will be. Oh, assume all of it, it's here, this makes it a little easier. Assume the actual costs are paid using cash. Okay, so this will just be cash. You're right. So this will just be cash, and this will be asset going down. So these are just the sales coming in, and so these are what. Oh wait, I didn't put anything in there. This one is kind of extra, but I think on the test I put that. I think it's on the test. It asks for that. Yeah, you know what? If it doesn't, if it doesn't ask for it on the test, and you put it in, I'll give you extra credit. How about that? I think it asks for it though. But yeah, this one only asks for the estimated warranty cost, which would be this. All right, and now for the tricky one. Okay. Original entry for the warranty revenues. I'm going to put in the unearned revenues also because I think I put that on the test. And I think it makes it a little easier to visualize or something. Oops. So the unearned revenues would be fine. Unearned revenues. Guess what unearned warranty revenues? Either one's fine. Okay, so the question is, how much of these will actually be earned revenues? The estimated warranty costs are. Yeah. I'm gonna put these on separate lines just so I don't get confused. Not that I ever do get confused, but the outside chance. All right, so the estimated warranty costs are 4 million. The actual costs incurred are 1.2 million. So we're going to use that to figure out how much of it we have earned. I'm gonna do it down here. On space down here. Here, do it. Okay, it's 1.2 million. Divided by the estimated. Times 5.6 million. That 30% times. $1,680,000. I want to check that. So this will be the earned revenue.
Professor, I think you got one too many zeros in the 56.
Oh, I
Five
do. I was overachieving when I wrote that. Yes, thank you. And so this will be what, warranty revenue will be 1 million. And this is really, this is what this one is actually asking for. It doesn't ask for this first one, but I think I put that in there on the test. I put it in. And if I did put it in, if you put it in, that I'll give you extra credit for it. Sometimes it's easier though, just to do the original entry and then figure out the second. Here, generally for the actual warranty costs will be 1.2 million. Assume they're all paid using cash. That makes it easier. So we'll have expense. All right, so that's it. Yeah, this is the hard part is this right here. This is the kicker. How much of this did we actually earn? We know what they gave us, but how much of it do we get to count in the current year? So the current year we'll get to count 1,680,000. And we'll have our expenses of 1.2 million. And ask for the profit. Question on that? Well, they've done something terrible. I kept you guys 2 minutes too late. It's 8:02. All right. Any questions on any of that? Okay, well, I think we have everything to turn in then. As I stopped sharing the screen when I click on when I shouldn't have. So I think we have everything. The only thing I need to send out the exam. That'll come out a little bit later on tonight. And everything is due a week from Friday. Any questions? Okay, well, I will see you guys in a week's time, and later on tonight, maybe like in the next hour or so, I'll get that the exam sent out. Okay. All right, I'll see you guys next week. All right, thank you.
Thanks,
guys.
Professor. Have a
Thank
good night.
you, bye.
Have a good evening.